Hello guys, today we are going to revise income under the head salaries and first of all, this will be a very fast revision and I am referring CA Jasmeet Singh Arora who is my teacher as well. So I am giving credit to him as well. So this is for please don't give any copyright. Haha and to be honest his channel is very low so he will not notice as well. So we're going to do a super fast revision, maybe 30 minutes or less. So let's start without wasting any time. So first of all, uh, we are going to directly go into allowances because we know the main start chapter starts from where you see what are allowances. So allowances means something you give to the employees, means any what we could say is any benefit, not benefit actually, but to use that benefit you give allowances. For example, you give servant allowances, means this is the type of benefit, but for to avail that benefit you are giving certain amount of money to your employer. So that is called the allowances. So certainly there are some fully taxable allowances. So you do not have to learn this, but you just have to take reading of one or two times, like servant, dearness, entertainment, rural, holiday, non-practicing, marriage, refer, city compulsory telephone, project allowance. So important are like clearance allowance and telephone allowance, and then medical allowance, and then entertainment allowance. These are like important ones which regularly comes in exam. And then there is fully exempted allowance. So what do you mean by fully exempted allowance? Which means you will not add in your income and head salary part. These are fully exempted allowances. So what are fully exempted allowances from the tax? So allowances means which are fully exempted. So first, so here are like when the allowance you pay to Supreme Court and High Court judge, any salary allowance or perquisite paid to Emperor of United Nation, and any allowance or perquisite allowed by Government of India to Indian citizen for rendering service outside the India. So means it all are like when you pay any allowances paid to Supreme Court or High Court judge. So that allowance would be fully exempted. And if you pay any perquisite to your employee of like United Nations, then it will be fully exempted. Or any allowance or perquisite if you pay to allowed by Government of India for Indian citizen for rendering services outside India. So if you're like if you're getting allowance from your Government of India for like to render service outside, means in foreign countries, so you will be that allowance will be fully exempted. This is not really relevant for examination, but yes. Then are official allowances. So what are official allowances? So official allowances are the allowances which amount received or actually means are the allowances the amount received or actually spent by employee, whichever is lower shall be exempt from that under the tax under the old regime. Tax under the old regime means these are the allowances which are exempted in the old regime. In old regime, and like this is important. Like it is only exempted in old regime, and main is that what would be the amount of allowance? Amount of allowance would be amount received, means the allowance received to you, or actually spent by the employee, or what the employee has actually spent. That would be your official allowance. That would be your official allowance. And like now there are some allowances here, like transfer allowance, daily allowance, academic allowance, uniform allowance, helper allowance, conveyance allowance, R&D, traveling allowance. So how you remember that? So for remembering these allowances, you there is a mnemonic, like you could use the mnemonic R R A hut. This is the allowance you could use. R for R A hut for what? Which are exempted under the old regime. So I haven't said the exemption amount. So the allowance you received means the allowance you received, or you're actually spent by the employer, whichever is lower shall be exempted. Means if anything from RA hut, means let's take R for research and development allowance. A for academic allowance, H for helper allowance, U for uniform allowance, T for transfer allowance. So if you get anything from these, anything from these, it is exempted in old regime. How it is exempted? The amount received or actually spent by the employer. For that means if amount received is 5,000 and actually spent is 10,000, you will get the exemption of 5,000. You will get the exemption of this 5,000, right? The It will be exempted from your old regime, right? Yes, right. Then under the default regime, exemption is only for traveling allowance, daily allowance, and conveyance allowance. Means which I haven't covered. Like transfer allowance is exempted in under old regime only. Daily old regime, no, daily not. Academic old regime only. Uniform old regime only. Helper allowance old regime only. Research and development allowance old regime only. And this much in the old regime. But if you see in the new regime as well, these three allowances are these three allowances are exempted in old regime as well, and the same criteria lies here. Actual amount received or actually spent by the employer. Then let's move on to personal nature allowance. So personal nature allowance means the following exemption allowed under old regime only. Again, it's a matter of old regime. And like first of all, like children education allowance exempted like 100 per child up to two child. Like children education allowance is exempt up to 100 per month per child up to two child. Hostel allowance exempt up to 300 per month per child up to two child. Transport allowance fully taxable, however, if granted to an employee who is blind or orthopedically handicapped with disability of lower extremities exempt up to 3,200 per month. And to be honest, here is the only exception. Like see, it is transport allowance is fully taxable, but however, if granted to an employee who is blind, handicapped, or disability of low extremities, exempt up to 3,200 per month, and it applies to new regime as well. New regime as well. Then outstation allowance, 70% of the allowance received or 10,000 per month. Underground allowance exempt up to 800 per month. Tribal 200 per month. Other notified allowances not mandatory for exam point of view. It's not really required, right? Main is this one, outstation allowance. 10,000 per month, 70% of the allowance received, whichever is lower, whichever is lower shall be taxable. Then we would be going for HRA. So for HRA, so exemption is only again under the old regime. HRA means rent paid minus 10% of the salary, 50% of retirement benefit salary, 40% of retirement benefit salary in case of any other place other than HRA received. HRA received. then HRA received, right? ओल्ड एज मिलेगा रेंट पेड माइनस इंटरेस्ट नहीं। अब देखो यहाँ पे रिटायरमेंट नहीं है, नॉट रिटायरमेंट। ध्यान रखना है इस बात का कि यहाँ यू शुड मेक श्योर दैट इधर हियर ओनली सैलरी इज गिवन एंड इधर रिटायरमेंट बेनिफिट सैलरी इज गिवन, राइट? So here retirement salary means basic salary, DA, RB and commission of percentage. Then we would move on to deductions. Very simple here again. Standard deduction 50,000 on the amount of gross salary whichever is less in case of old regime, 70,000 in case of default regime. Entertainment allowance only under old regime, only in case of government employees to the extent of 20% of basic, 5,000 or allowance received by other employee, whichever is lower. Professional tax allowed only under old regime. Employee will be allowed to claim deduction of the professional tax paid by him if the amount has been paid by the employer on the behalf of employee. It will be first in a gross salary and subsequently deduction is allowed. The amount is due but not paid, deduction is not allowed. Means professional tax will be only under the old regime, and employee will be only be allowed to claim his deduction. This employee will be only allowed to claim his deduction when professional tax paid by him. If the amount has been paid by the employer on the behalf of the employee, it will be first included in the gross salary as a perquisites. Means it will be first included in his gross salary as perquisites, and then subsequently the deduction is allowed. If the amount is due but not paid, the deduction is not allowed. Means main thing is not on due basis but paid basis. And the second thing is had been included in the gross salary. How it will be included as it will be included as what perk. Wait, my handwriting is pretty bad on this. Illustration 7. And illustration 7, you don't have to do. You can just see the questions. Actually, you can refer to C. Jasmeet Singh Arora YouTube channel. He is a very good DT teacher. You can see now retirement benefits. So we have came to benefits, right? Right. All right. So let's start the retirement benefit portion. First is gratuity. So gratuity during employment is fully taxable. At the time of retirement, treated as follows: employee exemption allowed under both regimes. So here you could take like now you will see the, because retirement benefit is a type of perquisites only, and it's a benefit actually, to be honest. And now you will see not perquisite, it is a retirement benefit. Retirement benefits are different from perquisite. Sorry, my mistake. Now retirement benefit is allowed under both the regimes. Government is fully exempt. If your other employee is covered under POGA, if your the other employee is covered under POGA, least of the following is exempt. What is exempt? See, 20 lakhs gratuity received or 15 by 26 of last drawn salary into completed years. Here, completed years is excess of 6 months. Actually, it is written here. It is the X part thereof excess of 6 months. Now you have to see right at what employee exemption under the under section 1010 allowed under both the regimes. Government is fully exempt. Other employee covered under POGA. POGA means like perpetual. I don't know the, it's something like called Gratuity Act. I don't remember the name, to be honest. So least of the following is exempt. So this is the ceiling limit of 20 lakhs or the gratuity received or 15 by 26 of the last drawn salary into completed year. Again, whichever is less shall be exempted. Whichever is less shall be exempted. And and you see the least of the following is exempt. Here again 20 lakhs gratuity received, half of average salary into completed year, and here completed means completed year, no excess of 6 months. No excess of 6 months. And here's salary, last on salary or salary here, average salary, basic DA plus commission of percentage. Basic DA of retirement benefit and commission only percentage of turnover. One. Average salary 10-month average salary preceding the month of retirement. 10-month average salary preceding the month of retirement. Immediately preceding the month of retirement. Month of what? Month. And it is fully exempt with the government employee. Alright, 15 by 26 last round salary completed year. Last here the last round salary is basic DA, but here gratuity receivement half of average salary. Here average salary means 10-month average salary of immediately preceding the month of retirement, and here the salary means basic DA and commission of percentage turnover. Average salary is 10-month average salary immediately preceding the month of the retirement. Right. Main is this one, average salary to completed year, and 15 by 26 last into last round salary into completed year. Right. Let's move to pension. Now, pension means uncommitted pension is fully taxable. Means during the employment when the pension is given is known as the uncommitted pension and it's fully taxable. Committed pension means which is received by which is sorry And in the case of commuted pension, if it is a government employee, it is fully exempt. If it is a non-government employee, the gratuity received, if, if it is a non-government employee, if the gratuity is received, 1 by 3 of the total pension is exempt. And if the gratuity is not received, 1 by 2 of total pension is exempt. The total pension is equal to commuted pension divided by commutation percentage. The meaning is really, really simple that if you're government employee, then you are fully exempt of the pensions. You don't have to see anything. But yes, uncumulated pension is fully taxable. And if you are a non-government employee and if you are receiving gratuity, then 1 by 3rd of total pension is will be exempt. And if you are a non-government employee and your gratuity is not received, then 1 by 2 of the total pension is exempt. And the total pension would be what? If you are given with the commutation percentage, like how much percentage of your pension you are commuted means you have already unlocked. So, and commuted pension means for suppose you have already commuted what? You have already commuted your 50% of your total pension means for an example, you have already commuted uh, 50,000 pension from your what a treasure may make your like think like your pension is a treasure and you have already collected 50,000 from it and uh, you and your commutation percentage it is given that you have commuted in the question you will be given like you have commuted 50% of your total pension, so you will divide by 50 and it's a simple math will get here 1 lakh, so which would be what the total pension, and you will be getting exemptions on your total pension means this both you will be getting exemption 1 by 3 of 1 lakh or 1 by 2 of the 1 lakh will be exempted in the retirement case, right? During retirement 1 by 3 of total pension 1 by 2 of total pension will be exempted. And yeah, then it's a leave encashment exemption under 10AA and under both regimes. Here also both regimes retirement benefit are usually allowed under both regimes. Leaves of the following is exempt. Then what? Leave encashment received. What you have received as a leave encashment? 25 lakh ceiling limit, 10 month into average salary, leave credit in months into average salary. There are four conditions. Again, leave encashment received, 25 lakhs, 10 month into average salary, or leave credit in months into average salary. Whichever is less. Whichever is less. So, first of all, the salary calculation here is very simple. Again, basic DARB and commission of percentage. Average salary would be what 10-month average salary representing the day of retirement. Here, the main thing is the day of retirement, right? The day of retirement, day of retirement. Then, okay, right here, see, leave and cash during employment is fully taxed. Leave and cash during the employment is fully taxable. Leave credit in months. Leave added credit in months. So what is the leave added credit in months? So leave available for completed year. Max you are allowed 30 leaves per year. Max you are allowed what 30 leaves per year is allowed. Leave availed during employment or leave encashed during employment. Leave credit in years is nothing. You're going to divide it with 30 days. You're going to get leave credit in months. Then it is simple math because when you will see that max 30 leaves per year, for suppose in the question is given like you are given with 30 years, 30 years you have been employed and then you are leaving 25 slash year, then it is fine. You can multiply it and put it here. But if it exceeds 30, if it exceeds 30, then you have to what put 30 multiplied by what completed year to multiply it by completed year, then put it here. So the ceiling limit is what? So the ceiling limit is 30. Beyond that you can't go. So you will put it here and then what leaves you have availed or what leaves you have encashed. Means leave availed means what leaves you have availed means what leaves you have been were not working out and you are enjoying. So that means you have availed your leaves. But again, or there is an option that You have worked on that leaves and you encash that leaves during the employment, so it will be mine deducted as well. So after deducting all those, you will be left with your leave credit, and then you divide by 30 days. Divide by 30 days, so you will get it in months. So you leave credit into months into your average salary. Leave credit in months into your average salary, you will get an amount, or the 10 month into average salary, or 25 lakhs, or leave and cash received, whichever is lower will be exempted from your leave encashment. It's done. It's not important more. It's not more relevant. Voluntary retirement compensations run at both regimes. Compensation received 5 lakhs or 3 months salary into completed year of service, last one salary the remaining month of service left. It's not really relevant for examination, but still, yes. Do not read retrenchment. Pardon, 6 months. You just read it, but it's not that important. Voluntary retirement compensation is also not that important, but you can read like compensation received or 5 lakh, which is your what ceiling limit, or wait, ceiling limit, or or you could just say 3 months salary into completed year of service, last drawn salary into remaining month of service left, whichever is earlier. Whichever is earlier. Alright, here it is coming again the most important point. Provident fund which is allowed under and again under the both regimes. So first, SPF. If your employer contribution is exempt, it is will be not counted as perquisites. Employee contribution would be deduct. You will get deduction under ATC. Interest credited would be exempt. It is so you see to see the note 3. Yes, you will see that. Wait a second, and withdrawal is exempt as well. RPF exempt up to 12% of retirement benefit salary. It is exempt to 12% of retirement benefit salary. Employee contribution has reduction in ATC. Interest rate exempt up to 9.5%. Again, it's saying to see the note 3. Wait, we'll see that. Withdrawal is exempt. See note 1. So first of RPF, let's see. Withdrawal is exempt only. Exempt. Your withdrawal of RPF is exempt if any of the following condition is satisfied. What is it? 5 years of continuous service with the same employer. If you served for 5 years or more, 5 years or more, then you will be exempted. Then retires before rendering 5 years of service before of ill health, contraction, or discontinuation of employer's business or reason beyond the control of the employee. On cessation of the employment, if existing employer accumulated balance in RPF is transferred to the new employer or transferred to the NPS account referred to in section 80CCT. So in deduction, you will see a deduction. You will see section 80CCD, where you will see on section of employment means on the discharge of employee, the existing employer, what accumulated balance in RPF, what he have accumulated, is transferred to the new employer or transferred to his NPS account referred to in 80CCD, what it's referred in the deduction chapter. So then it will be allowed. It will be exempted. Right. On these cases, it will be exempted if any of these following conditions are not satisfied. If any of the conditions is satisfied, it's the exempt. Right. If any of the following condition is satisfied. Right. URPF, tax at the time of withdrawal, no reduction, tax at time of withdrawal, C note 2. Well, let's see what's written. Employer contribution under the head salary. Employee contribution is exempt. Interest on employee contribution taxable under the head other sources. Interest on employee contribution taxable under the head salary. Means what employee has contributed would be exempt. Right. In the under the head salary it would be exempt. Employee contribution tax interest on it will be charged on the other sources. Employer contribution it will be taxed on the salary as what? As perk. Then PPF not attributable. Employee does not contribute. Employer contribute does not contribute in PPF. Only employee contribute, and you will get deduction in ATC. Exempt against note 3 and net exempt. So let's see the note 3. What is saying there? What it is always saying that to See the note 3 for interest credited. Let's see it. Employee contribution on toward SPF, RPF, and PPF as well. Exam understated 10 not applicable interest during the previous year to the extent it relates to contribution made by employee exceeding 2 lakh 50 in any hour after 21. If the interest is exceeding 2 lakh 50,000, if it is not exceeding 2 lakh 50, then it is exempted. In case of PPF, it exempted, SPF exempted, RBS exempted to 2.5, 9.5%. But if the interest goes beyond that, it would be fully taxable under the head salary or other sources as required. Means if employee contribution, or interest on that would be taxable under the head your other sources and employer contribution, and if the interest exceeds, it will be taxable under the head salary. However, if employer do not contribute net fund, then the exemption in the respect of the interest allowed to 5 lakh instead of 2 lakh. Means if employer does not contribute in that, then the exemption of the interest limit goes up to 5 lakh. Alright, now we're finally starting the 5 physics. So, rent-free accommodation section 17 to rule 3.1. Value of accommodation. Case 1. Accommodation is owned by employer. Specified percentage. If the population is 40 lakhs, let's see the specified percentage in the note 1. If exceedance of 40 lakh, 10%. 15 lakh to 40 lakh, 7.5%. Up to 15 lakh, 5%. Value of accommodation. Accommodation is owned by employer. Then the specified percentage of the salary. Specified percentage of the salary is this one. Means or specified if accommodation is owned by employer. If the accommodation is owned by employer, what rent-free accommodation is owned by employer, then you have to see a specific percentage of salary, and then accommodation is taken on rent, and you have to see the 10% of salary or rent paid by the employer, whichever is lower, shall be added here. Then government employee, central or state government. If there is a your government employee, then the license fee is already determined. You don't have to take worry of that. But if non-government, then the main thing like 10% of cost of assets. Asset owned by employer, higher charges, if they taken over the rent of employer, or less the amount recovered from the employee. See here, this thing is like 10% of the cost of asset. If asset is owned by employer, higher charges paid by employer. If asset is taken on rent by employer, less the amount recovered from employee. So it will be less, and then you will be coming up with the value of your what perk, right? If it is if employee is paying higher charges, then you should add there's those higher charges here. But if your employee doesn't own that asset, the 10% of the cost of asset of the cost of asset you should add here. After adding, minus your amount recovered or any concessional charge which is recovered from the employee, you should subtract, and then you will get the value of work. The salary of the rent-free accommodation shall include basic pay, DA, taxable portion of all allowances, bonus, commission fees, etc. Here the commission is not the percentage, the whole commission is considered here. And DA, which forms of retirement, means salary plus DA of RB plus your commission, which is full, then taxable allowances, then bonus, leave salary, everything. Not include taxable perquisites, provident fund, retirement, gratuity, pension. You should not means include that, right? Fringe benefits. Like if your employer is giving interest at concessional loans, then the perquisite will be sum of value of outstanding balance SBI rate. It will be also considered SBI rate, or mainly SBI rate we consider, and minus employer rate into 1 by 12. So this will say your what concessional rate, and then you will just figure it out, where aggregate amount of all such loans during the particular up to 20,000. So up to 20,000 you will be exempted, and beyond 20,000 this rate will be taxable. Means the concessional rate means the extra rate which is your SBI is giving extra rate, you will be taxable on that. And the on what will taxable? Sum of monthly outstanding balance. Sum of monthly outstanding balance. Right. You're giving free food refreshment rule. Means free refresh tea alcoholic beverage during working hour are exempted, so you don't have to worry about it. But free meals are taxable. Free meals are taxable. Cost of meal minus amount recovered. But if the employee is giving any amount that it would be minus from your per visit value. Our per visit up to 250 rupees per meal except only under old regime. Only under old regime. Only old regime. Will not get any difficulty by solving all these questions. During accommodation, holiday, home, etc. Rule 37. So it is not that. If you're giving gift to employer, cash gift is fully taxable. Kind gift is exempt up to 5% per annum. Above 5,000 of kind gift will be what? Fully taxable. Credit card facility again per value is what amount spent by personal use of employee. Club facility again amount personal use by employee. Then this is main. You should see here. Laptop. If your employer is giving you asset to use, laptop and computer would be nil. Others 10% of actual cost or higher charges paid by employer, less amount recovered from employer. Or higher charges, whichever is less or less amount recovered from the employer. Less amount recovered from the employer. So you have to see that. It's not very really hard section or something. This is not really important. Any other benefit? Caution of them and not important. Sale of movable asset. Let's come here. Sale of movable assets. Who is selling? Employer to employee. If this happens, then only you will use sale of mobile assets. So what the cost of asset which employer is selling minus the depreciation minus amount recovered would be your taxable value. Depreciation, and here is the note, depreciation in all the cases charged for completed year. Means what year is completed. Depreciation rate is as follows. For computer and peripherals, it's 50%, motor vehicle 20% WDV, other asset 10% SLM. Before your employee was your employer was given to employee for use of asset, but here sale of asset. Employer is selling the asset. So cost of asset would be what? Depreciation. Cost of asset minus depreciation minus the amount recovered from employee. Tax. Here comes the taxable value. Computer or peripherals 50% WDV, motor vehicle 20% WDV, others are 10% SLM. Depreciation in all cases is charged for the completed year. Then comes the medical facility. Expenses incurred and paid for the employer only if it is in employer hospital exempt, government hospital exempt, approved hospital for specific disease exempt, health insurance below employee and family member exempt, any other is taxable. Only these conditions are exempt. Employer hospital, government hospital, approved hospital of specific disease, health insurance premium of employee and member. If your employer is giving you some kind of perquisites for uh, outside India services stay abroad, stay abroad, exempt up to permitted by RBI. In the question, we give you per RBI limit. If your treatment is in abroad, then exempt up to permitted by RBI. If you're traveling abroad, if your gross total of employee exceeds 2 lakh, which is obviously it would be exceeding, but yes, gross total income, not gross total income under that salary, gross total income on all heads, in all heads, then fully taxable under fully exempt. Exemption is allowed for medical treatment of employee, spouse, children, dependent, family, brothers and sisters. Means here, family member includes what? Uh, Spouse, children, Dependent family member like parent, mother, and sister. Exemption of stay one day attended only. Exemption not for COVID-19 treatment subject to notified condition of CG. It's not that important. Yes, leave travel concession right now only under old regime. Now you see the only perk I have seen till now is leave travel concession, which is only under old regime, only under old regime, only under old regime. Say everything is on both the regimes, but here it is only under the old regime one, only under the old regime one. Right? See, the journey performed by the maximum exemption, like the air, other than air, first class AC fare railway. Means if you see, if your employee, if your employee is traveling with air, and so the maximum exemption is allowed under old regime is economy fare, other than air, first class or AC fare or railway. Alright, air and economy class, other than air means first class AC fare of railway. Other than air, first class AC fare of railway. If it is place is not connected by rail, then recognized transport system, like bus or something like that. So those recognized transport system, deluxe class or first class would be accepted. If it is a non-recognized transport system, it's not recognized, something other than non-recognized, then first class AC fare of railway would be exempted. So note is what ceiling on the number of journeys. The exam shall be available to an individual two times in each block of 4 calendar years. Current block is 2022-2025. It is declared by government. It's declared by government, so you cannot change that. And it is two times in each block of 4 calendar years. Family shall include again spouse, children. However, exemption shall be exemption maximum 2 children. But in the case of multiple birth, the other one child exemption is allowed for all children. So you don't have to need to worry of this statement. Then wholly or mainly dependent parent, brothers and sister would be also allowed. Dependent parents should be allowed. Alright. Or again, this thing is only available for travel in India. Perquisite taxable in the hand of specified employees only. Gardener, watchman, sweeper, or any other servant. Perquisite is the amount spent by employer less amount required by employee. Transports. Okay, what is specified employees? Maybe a whole-time director or whose income should be greater than 50,000 would be a specified employee, to be honest. For gardener, watchman, sweeper, or any other servant, if your employer is giving you like for gardener, sweeper, or any other servant is giving you perquisites for that, perquisite would be amount spent by employer, less amount recovered. Transport facility, again, partially fair market value reduced by amount recovered. Next, we will see the in part, we'll see the how much the employer has spent or how much is recovered from the employer. Then education facility, right? Nature of expenditure is what is the nature of expenditure? Like training of employees. That is not taxable at all. That is not taxable at all. Education facilities of training of employees, then it is not taxable at all. Education to family members, it would be fully taxable. Education to family member would be fully taxable. Let's see how. Education to children of employees. Education to family members is fully taxable. Education to children of employer, we'll see as follows. School maintained by employer means that a school is of employer or the school is sponsored by employers. Cost of education in similar locality reduced by amount recovered from employer. Means the how much the employer has spent, how much the employer has spent on the child of employer, and the what is the fees of in the same locality minus the amount recovered. Other schools cost the employer as reduced by amount recovered from the employer. Cost of education per child does not exceed 1,000 per month, then such benefit is not taxable, otherwise fully taxable. If the cost of education of per child, here are no limit, is saying per child does not exceed 1,000 per month, then such benefit is not taxable. Otherwise, it is fully taxable. Usually, the government schools are less than 1,000 per month. So, it is saying that if the employee is giving an education in a government school, then it will be not indirectly they're saying that. But to be honest, usually the all private schools are more than 1,000 per month. So this law says that if the cost of education per child exceeds 1,000 per month per child, then the benefit is not taxable. If it does not exceed, then it is not taxable. If it exceeds, then fully taxable. Right. Right. Again, Garner's point. Gas rates and water facility, manufacturing cost to the employer or amount paid to the third party. Sweat equity shares, sorry, SOP. What will the perquisite? FMV on the exercise rate means market value. What is the in what price the share market is trading? Means the shares are trading minus amount paid actually paid by the employer will be the perquisite value will be taxed according to that. Payment of life insurance by the employer. Premium so paid shall be taxable. However, premium paid for the personal accident policy or staff group insurance shall be exempt. Premium so paid shall be taxable. However, the premium paid for personal accident policy of a staff group shall be exempt. It says that if your employer is paying your life insurance premium, would be what? That would be taxable. That would be taxable. Means if your employer is paying the life insurance premium, alright, it would be taxable. Previously, we have talked about health insurance premium. Like let me show you. Previously, we talked about health insurance premium. See, health insurance premium of employee and family member. This one. Don't get confused. Here I said medical, but here I said life insurance, not health insurance. Here I say what? Life insurance premium. If the employer pay for life insurance premium, then the premium so paid is taxable. But however, the premium paid for personal accident, the premium paid for personal accident policy or staff group insurance scheme shall be exempt. These two policies. What is that? What is that? This personal accident policy or staff group insurance. Personal accident policy or staff group insurance shall be exempt. Shall be exempt. Then coming to last, motor car facility. Valuation of motor car facility. Valuation of motor car facility. Car owned by employer and used by employee. So if your employer is providing you motor car facility, then the car owned by employer and used by employee. If if your car is owned by employer and it is used by employee, car owned by employer it is used by employee, and the employer is giving the motor car facility. So for it should be for what purpose? So it could be of what? It could be of what? First, let's see if it is of only for personal use. If it is for personal use, if your employer is giving you motor car facility and the car is owned by the employer itself and it is used by the employee and the employee is using it for only personal purpose and expenses are made by the employer, then the expenses, then what would be the perquisite value? Perquisite value would be the expense incurred by the employer, the expense incurred by the employer, driver salary, if driver salary, if it is given, plus 10% per annum of cost of car, plus higher charges of car, minus amount recovered from employee. That will be the perquisite value. Means what employer has spent, first this, what employer has spent. So what employer has spent includes driver salary if given, 10% per annum of cost of car. So what cost of car the employer has given? That 10% per annum value means a 20 lakh car is given, then 2 lakh rupees it will come here plus higher charges of car. It could be either of two. It could be either of two. And this would be what if hmm, this is the expenses which are incurred minus higher charges, or it will be enough if the employer like Now, first, before moving to the first, now let's see a case where car owned by employee means employee itself owned the car and employee itself used it as well. So, sir, means then why you calculate the purchased value? Like if the employee is owning the car, but employee is using the car, then why you need to calculate the purchased value, means the benefit value? Because the expenses are made by the employer. Expenses are made by the employer, and the car is used partly official and partly personal. Partly official and partly personal. Personal. Wait a second. Wait a second. No, no, no. First, not. Alright. The a car owned by employee and used by employee itself, expenses made by the employer, and the car is used for personal purpose. The car is used for personal purpose. Then the expenses that incurred by year, like the driver salary. Here you see the higher charges, the technical cost of car will not come. Why? Because the car is owned by employee itself. The only thing, the expenses incurred by the employee, will see driver salary if any, and then amount required, that would be the purchase value. Now, if any other vehicle and expenses are made by the employer, partly official and partly personal, expenditure by employer will be 900 per month. Mainly this one. Again, we come to here. If employer and employee, small car 1800, big car 2400 per month. Small car 1800 per month, big car 2400 per month. For driver 900 per month. For driver 900 per month. What if when the employer is owning the car and employee is using it, expenses are made by the employer, partly official, partly personal, amount recovered from employee is ignored here. Amount recovered from employee is ignored here. So, requisite value will be what? It will be what? Your deemed personal expense. Deemed personal expense. Will be your deemed personal expense, and it would be your what? It would be your purchased value. The small car 1800 per month, big car 2400 per month, driver 900 per month. When the car is owned by employer, used by employee, and expenses made by the employer, partly official, partly personal, amount recovered is ignored, and why it is ignored? The straight away the personal purpose, personal expenses here, and that would be your purchased value. Because the official one will not receive any purchased value. Official one is official. And again, the same condition where employee own the car, employee use it, expense made by the employee, partly official, partly personal. And if it is partly official and partly personal, but the expense is made by the employee, expense is made by the employee itself. The car is given, but employee reimburses himself only. In the small car 600, big car 900, and it also a deemed personal expense. For driver again 900 per month, it would be again a deemed personal expense. And if the employee uses his car and employee owns and employee use it, then the perk value would be what? And expenses only made by the employer. The car is but partly official, partly personal. The expenses incurred by the employer would be driver salary minus fixed personal expense minus fixed, or I could say deemed. Wait, it's quite a problem. Wait, minus, it would be here deemed official expense. Deemed official expense means expenses incurred by employer plus driver salary, if any. Then here, deemed official expense minus your small, if your small car 1800 minus 2400 99. But what is thing here? It comes. Let me explain you. Let me sum you up this one. Like If your employee use your car, means employee has the car and employee uses it, and the expenses are made by the employer and the car is used for partly official and partly personal, then the expenses incurred by the employer would be the expense incurred by the employer minus your deemed official expense. This would be the for your deemed official remaining is what your personal. And this is here in this condition. This one is treated as this means as an official. That's why it is subtracted, and in this case, this is treated as personal. So directly, it is a work. All right. These are practice questions I have showed you all. So this is up. It took 51 minutes almost.